Stocks were immediately bought following a very mild pullback, and I will show you on the chart the exact levels at which the buying came in. We will look at dollar as it rallies into resistance. It may actually continue this rally, and we'll try to ascertain where this rally might continue to. However, for now, gold and gold miners are approaching stratosphere, so definitely overbought, but at the same time extremely strong. And we will look at a recent trade for a company with a ticker symbol ABAT, also known as American Battery Technology, so stay tuned until the end. Don't forget to hit the like button, share this video, make a comment. Even if you put a thumbs up or a heart into the comment section, it will improve the chances of more people seeing this video. So thank you for any kind of promotion that you will do. If you are a subscriber, stay tuned. We'll be covering, you can see there's a sizable amount of stocks and various securities we'll be covering. Crude oil, Bitcoin, natural gas are all in the members only section. Large cap stocks, as well as several dozen of stocks from the more speculative securities, as well as some of the psychedelic and cannabis related stocks. As always, I'll be using my proprietary masterchartstrading.com price action indicators, which you can see on this chart, and you can sign up at masterchartstrading.com. These are the indicators, this green, blue, red, and yellow lines. So let's first look at S&P 500, but more on a shorter term frame. So we're currently looking at a 4-hour chart. And right here we are seeing highs, all-time record highs, 23rd of September. And basically at that point we see a pullback. So notice that we got down to the blue line, to the green line. We sort of dropped below this green line, and then we had several, or two rather, what appears to be a hammer-like candlesticks. So this is the hammer-like candlesticks right here from September 25th. And basically that was it. So hammer candlesticks usually indicate the bottom of the range. Indeed, in this time around, we saw a pullback, hammer candlesticks, and now a rally seems to be unfolding. So we're back above this green support resistance line. Now remember, this is a 4-hour chart, so it's much more granular than the daily chart. So we're looking at basically non-stop uptrend, and notice, this was the case since September. We saw a drop towards the green line and then a rally. Another one was right here in September 17. This was previous in September 5th. And then September 17th, we saw a drop again towards the green line and then yet another rally. So right now we're seeing something similar. We saw a drop towards the green line and attempt at a rally for now. We'll see what happens on Monday. Anything can happen, obviously. There is no shortage of news that I'm reading on Wall Street Journal. There's just non-stop stuff happening. So we will see if any of those news make any difference, or are we just going to ignore everything and make new records, continue to make new records. Entirely possible. We've been doing that pretty much since April of this year, pretty much. Notice down here in late August into early September, the pullback, actually went a little bit further down below into the blue line area. And it's interesting because here on September 2nd, we can look at the charts of more of the market breadth. I don't normally show this to the general public. This is more of a members only section. So there's that dip into September, and it was barely a blip really. And the previous one was in early August, so let's look where that early August took us. Let's see on the more granular chart, on the 4-hour chart. So there it is, early August dip into the more oversold territory, which you can see on the advanced decline line. This is a 10-day exponential moving average of the advanced decline line. So in August, in very early August, it was moderately oversold. And we can see it's the same thing here, basically. The situation was not the same in September 2nd. You can see that this chart was not even moderately oversold. It was basically at zero. And right now we're sort of in that moderately oversold area, but we're not even down to the blue line. We're just around the green line. So two ways to interpret this. We might see like a double dip into a more deeply oversold area, or we can just rally towards new records. So very strong chart. I think we will probably continue seeing new records, but looking, for example, on the daily chart, I thought we're done, or at least like we're gonna see a short-term pullback. So I thought that this was sort of like engulfing pattern. Actually, it was not really an engulfing pattern. It was just kind of like a garden variety pullback. But I thought we're going to see something deeper, because just the way this chart looks, it's so overextended. I mean, we came from April into September with just a giant move. We're about 40% higher. So it's really, really overextended in less than a few months, really. Again, we will see if this takes us anywhere. There is a chance that we will see, like a double dip pullback towards this. This is a 4-hour chart, so we might see like a double dip pullback towards this blue support resistance line. But another possibility is we just make new records. I don't see any, bigger or deeper pullbacks unfolding unless something again dramatic or drastic happens. But we will see again. So for now, we're watching this chart. We're seeing pretty much same regularly scheduled record highs, and we're holding our positions. That's basically it. There's that chart for S&P 500. The previous chart that I showed you was a continuous security, which is a contract for difference, and this is just a regular S&P 500 chart. On this chart, there was not really a bearish engulfing. It was more just like a regular pullback, but it is definitely overextended here. So at least some corrective action is quite likely. So we will see if or when that corrective action will take place. That's about the best I can offer at this point. Let's switch gears, and we're currently looking at the dollar currency index, DXY. So dollar currency index basically is in a downtrend. This is a 3-year low here on September 17th. And we got a small rally. This was a Federal Reserve decision last week. So we got a small rally from the 3-year plus lows towards this yellow support resistance line. And notice that we so far have ran into this resistance, and yesterday we kind of touched it, and then today we sort of touched it again and bounced off of it. So for now the resistance is not yet overcome, and we will see if the resistance will reassert itself, or might there be a beginning of a dollar rally. I kind of tend to think that we might see rally continue, just because of the way Once again, the way this chart is very overextended to the downside, just like the S&P 500 is quite overextended to the upside, the dollar is actually the opposite. It's quite overextended to the downside. So we might see at least a relief rally, and a relief rally could take us higher towards this red support resistance line area. So from here we might see maybe another 3% move higher. At that point we will need to we'll need to see if that rally needs to be shorted, or we need to do nothing at that point. So like for example, previous opportunities to sell short were back in actually in April of this year. So this is 2nd of April opportunity, which was extremely profitable if you took it. You can see a down move for the dollar currency index was quite significant. So we will see pretty soon, probably Monday, Tuesday, if this rally has any legs. If it does, then target is around the red line, which is around 3% higher. However, the way things were going with gold and gold miners, I think we should look at it on the weekly chart just to show you what it looks like. I mean, anybody can look at this chart and say, oh my god, this is just so overextended. At the same time, it's so extremely strong. I don't think this has been this overextended in a very long time. This is by far the strongest and the furthest it's been overextended to the upside. So we might see finally some sort of a pullback. In fact, I thought we're done. Here's the gold miners, GDX. I thought we were done with this. I mean, look at this. We had 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row that are positive green weeks, and then this week we actually gapped to new records. So this gap kind of makes me think that maybe we might be done. There might finally be some sort of a corrective action. In fact, this weekly candlestick looks like a hanging man. That's a hanging man candlestick because it's at the top of the range. If it was the same candlestick, it would be at the bottom of the range. It would be considered like a bottoming candle, like a hammer candlestick. But this might be a topping candlestick for sure. I mean, after 8 weeks of moving higher, a pause just might be upon us finally. So if I am correct and we will see finally a pause, then it would imply dollar would rally higher. So dollar moves higher, gold would move lower because gold divided by US dollar. So if the bottom part of this equation gets bigger, it will pull this currency pair lower. So gold over dollar. And by extension, gold miners will also probably pull lower. So I already wrote here to my subscribers, are the gold miners stopping? So it's possible. We had this gap up, but then by the end of the week we kind of closed the gap and actually moved slightly higher. So overall, very strong chart, but at the same time, just extremely overextended. So we will again see what happens next week, but yeah, overextended for sure. And finally, I wanted to show a recent trade that we did for a company called American Battery Technology. So ticker symbol ABAT. Not a very famous company, yet it's an interesting pattern. So let me show it to you first on the weekly candlesticks, and notice the way this chart looks. So you can see at some point this company was $61 and then it just kept collapsing. And another interesting point is, notice that it hasn't touched this blue support resistance line. I mean, it touched it, but it hasn't closed above it in since 2021. And notice that again, this blue line hasn't been touched, and these levels here that just recently in 2024, early 2025, they were actually all-time lows for the company. I mean, it really just collapsed. Yet a few months ago, we saw a initial breakout of, a couple of months ago in July, we saw what's called an initial breakout right there on July 22nd. And then I got kind of interested in this, and we actually, I went actually ahead and sent an alert out here on the 28th of July. The company took a little bit of time to go finally to target. Interesting thing about this chart is that right there on the 8th of August, you can kind of see that we touched this red support resistance line, and this is exactly a hammer candlestick that I was referring to. So it looks like a hammer, a low kind of handle and a largish green body. So that's a classic hammer candlestick. And then from there on, we saw a rally, and then finally a breakout right there where I'm hovering on the September 18th rather, during the earnings. I mean, they didn't make any money, but at least it seems like the earnings were better somehow, and the investors obviously liked it, and then we saw a nice move higher. So, very volatile stock. This is a tiny, $2.86 stock, went from $2.86 to as much as, $5. So it basically almost doubled. And right now, if you opened it, hopefully somebody, one of my subscribers, at least some of my subscribers opened it, and you can see that we moved higher towards, 52-week high. So it looks like we're seeing this company finally break out. And that's it for this week's recap. Please head over to masterchartstrading.com, click on sign up and sign up for one of the products. So once again, I have these trading indicators that are available for tradingview.com. These green, blue, red, and yellow lines, they are indeed available. These are my proprietary trading indicators that are available for tradingview.com. You can sign up on tradingview.com for a free account and then come back to my site, Master Charts Trading, and then sign up on my site, and I will open the door for you on tradingview.com. So you can see the same charts, same lines on your chart on tradingview.com. Now I know it sounds a little convoluted, but this is the only way it works right now. The other option I have is the newsletters. So I send out daily alerts about the various securities we trade. So for example, this week we will be covering several dozen of various securities such as ETFs, crude oil, Bitcoin, natural gas, large cap stocks, speculative securities, as well as some of the more obscure ones that are psychedelic and cannabis related. So I send out daily alerts as well as weekly members only videos, so sign up for that. And then of course the best deal is to get both trading indicators and newsletters, and the best deal out of those is to get the yearly subscription. So you get 2 months off compared to if you bought the monthly subscription to those products. Again, that's it for this week's recap. Please remember to hit the like button, subscribe to this channel, share this video, put a heart or a thumbs up into the comments section of the video, and this means that this will make the YouTube think that this video is important and more people will see this video. That's it for this week's recap. Thank you for watching and have another great trading week. Bye-bye.